Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Sunday, May 22nd, 2022. Appreciate you coming here, visiting the podcast. This is my weekly trading weekend update of the trades that I took last week, when I bought them, why I bought them, how I am going to manage them going forward. And also what we're going to do in this podcast today, we're going to talk a little bit about trader psychology. We are going to read a fun trading poem, and then I have gone down through my watch list and I have selected some potential trades for next week. As usual, I go through the watch list. I look for support resistance levels of stock trades that may happen next week, but generally they have to go lower to find some support, or higher to trigger some kind of entry. So I do have those today. We're going to go through those. We're going to take a look. But boy, what a difference a week makes. The last 8 weeks, we've been going down, 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 down. Swing trades have been very, very difficult to get any traction on. I mentioned this last week. Thank goodness. What a great month in day trading for me, I and my partner Ava, and so very grateful for that. But it was nice to have some swing trades go our way this week, and so I will be going through all of the different trades that I took last week, and again, when I entered them, why I entered them, how I'm going to manage them going forward, either to the upside, to the downside. Did take a weekly trade that I'll share with you, and a monthly trade that I will share with you as well. However, I made a mistake on that monthly trade because for some reason I thought that Friday was the last day of the month. It is not. It is Tuesday. So I made a little mistake there, but I'll go over. Of course, monthly trades, I'm going to buy those or take action on those in the most part on the last day of the month, and I got that confused, but anyway, we'll see how it goes. So take a look at current trades, dailies, weeklies, monthlies. Going to talk a little bit about trader psychology because I think it's always very important. It's always one of the most important skills that you can learn in trading, so I like to touch base on that. Then read a poem from trading poet Frank, and then we will turn to potential trades for next week. Okay, so that's the plan for today. I hope you had a good week last week. Hope you got some green on your screen, put a little wind in your sails. I mentioned in the last couple weeks or 2 or 3 weeks of podcasts that I said, we will eventually bounce, and better late than never, we got the bounce. So that was helpful for sure. All right. So first off, I have to run the U.S. legal disclaimer. I will be back in about 40 seconds, and then we'll get started. So hang tight. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, let's get started. Okay, here we go. Apple. All right, so I did buy Apple back on May 20th. Why did I buy it? Well, 2 signals. There's the primary signal, which is the intraday under 30 over 30, and then the supporting indicator, which was the negative third ATR channel. Remember, 92% of prices tend to stop going down, go sideways, bounce at the negative third ATR channel. I will not take a trade just based upon the rejection of the negative third ATR channel, but I certainly like it as a cherry on top, or as an enhancer to my main signal, which was the under 30 over 30. So back on May 20th, I did buy Apple, at 137.47. Of course, as usual on any one trade, I take my maximum allowed loss. I divide it by the value of the 2 ATR. That accounts for volatility and puts me outside of noise and shows me how many shares to buy and also where my maximum allowed loss is going to be. So I just take my entry price 137.47 and whatever the value of the 2 ATR was on that day, put that below. Then if it does get down to that level, I just go ahead and I sell because I'll know exactly how much I'm going to lose and I need to be okay with that. Usually for me it's about 0.5% of my account, but 95% of the time your end of day stop is going to kick in, not your emergency stop. And my end of day stop was simply a close below the 30 RSI. So when I bought Apple, it was a 33.25. And so I was, risking hypothetically 3.2 RSI points to the downside, although it doesn't always work out that way. But, and then orange line up here is the trailing stop level. It's 1.5 ATRs above my entry. Once it gets to that level, then I switch and I go into trailing stop mode. And you can see on Friday, it did get there. So now I'm in trailing stop mode, which means if I have a close below any previous bar from here on out, so this was Friday's bar, if I have a close below this low on Tuesday, then I would sell half because I have a nice profit. It's moved outside of noise. It's moved out of 1 ATR. It's moved 1.5 ATRs. And so now I'm outside of noise. Good place for me to have my my trailing stop levels go into place. So another thing though, I took this trade with an under 30 over 30. The natural flow of RSI is from 30 to 50, and then from 50 to 70, or from 70 back to 50, it should find some support. And if it loses to 50, goes down, it should hold support at 30. So right now we are at 49.16. So it stopped right about where it should at the 50 RSI. It didn't get above it. So going forward, if we reject this 50 RSI, like, maybe we go above 50 on Tuesday and then close back below 50, I would also sell half. Okay, don't get that confused with the close below the previous day's low because it moved 1.5 ATRs here. If I get a close below the previous day low, I will sell half. But I also have mechanisms in place that if it rejects the 50 RSI above, I will also sell half. So hope that makes sense. This particular trade from entry to current price up about 8.17%. So going forward next week, it reached 1.5 ATR trailing stop level. If I get a close below the previous day's low, I will sell half. Also, because the natural flow of RSI is between 30 and 50, if we do reject the 50 RSI on Monday, I will go ahead just lock in half of the position. If it goes above 50 and holds, well, then I don't have to do anything. So great trade on Apple here, up 1.87%. Amazon, all right, very similar trade to Apple. Bought this on the 24th of May. Intraday rejection of the 30 RSI. That was the signal. At the same time, MACD was positive. Got long at $2,090. Right now, it's $23.0293. Up very nicely. Also placed my emergency stop. Where's my end of day stop? That's right. Close below the 30 RSI. Nice move up here. Nice move up to trailing stop level. It's 45.04, not quite as high as Apple. So same thing goes for Amazon. If I get a close below the previous day's low now, I'll go ahead and take half profits. If it goes up, rejects the 50 RSI, also take half of my position off. Of course, I mention this each podcast, but I do like to play offense and defense with my trading. Emergency stop is a defensive maneuver. End of day stop is a defensive maneuver. A rejection of the 50 RSI above here, because this was an under 30 over 30, is also a defensive movement and maneuver. But the offensive comes from the partial profit taking on the way up. Whenever we move 0.45 ATRs from the previous day's close, that is a profit target, and I will take 10% of my position off. And I always place 3 profit targets each day. So when I bought it, next day moved up, took a profit target. Second day it moved up, took another 2 profit targets. On the way up here, I can't remember if this was 1 or 2. I think it was 1. Let's see, 53. Yeah, it was 1. So I have been scaling out, taking profits. Don't want to give it all back. Want to lock in some. That's the offensive part here. So under 30, over 30, placed emergency stop, end of day stop, trailing stop level. We are there. I am in trailing stop mode. Close below the previous day's low. We'll take half the position off if we reject the 50 RSI. Also, we'll take half the position off. This particular trade, about 8.99%. CCJ, a little bit different type of a trade. The previous 2 trades I just showed you were under over 30s. Well, on Camco, this CCJ, I had a close under and close back over the 200-day moving average. Bought that on 523 at 2404. Also, another signal that I used here was the break of a fractal to the upside. A fractal is where you have a high point with 2 lower high points to the left, high point, 2 lower high points to the right. On the day that I took the trade, not only did we close under 200 and over 200, but we also broke the fractal to the upside, and really like that. And also another cherry on top, the MACD closing, the green closing over the red. So MACD was positive. A lot of good indicators there, and it has moved up very nicely. Same thing, emergency stop. Where's my end of day stop? Well, I took it because we had to close under, close over the 200. So if it has a close back under 200, take the small loss. Now, orange line up here again is 1.5 ATR trailing stop level. This has not reached that point, so there is nothing for me to do unless we close below the 200. Or in other words, if we have a close below the previous day's low, in the last 2 examples, I would take half profits because it was an under 30, over 30, and we reached the 1.5 ATR trailing stop level. Have not reached this yet, but still this particular trade is up about 4.87%. Next trade, Netflix. Netflix bought this back here on 513. Why did I buy it? It was an under 30, over 30. That was the main signal. We also had a close under the 5 EMA and then back over the EMA. MACD was positive. Same procedure. Bought, position size, taking my maximum allowed loss, dividing by the value of the 2 ATR that shows me how many shares to buy. Also shows me where emergency stop is. Where is my end of day stop? Well, I took it with the close under 30, close over 30. So a simple close back under 30 would be my end of day stop. It did bounce, pulled back a little bit, but held the 30 RSI, consolidated, and then of course rallied the last few days. Orange line up here is the 1.5 ATR trailing stop level. Have not reached it. I did take an under 30 over 30. So on under 30 over 30s, if we reject the 50 RSI, immediate signal to sell half. But very happy with this trade, and this trade so far up about 4.21% on Netflix. SO, a little bit different type of a trade. Actually, crossover there. Have not seen a crossover in a long time. I was telling my trading partner Ava, I was like, I'd sure like to get a crossover. That would be good for the market. And I did take the crossover here on 516. I don't take all crossovers. My favorite crossovers come after previous sideways motion. And you can see we consolidated here, we moved sideways. And why is this important? Sideways motion leads to trends. Trends lead back to sideways motion. So I had sideways motion here in the value zone, had a 520 crossover, bought here at 74.60. Of course, position size, emergency stop, end of day stop, where am I looking for my end of day stop? Was a 5 crossing below the 20 EMA. That will be my end of day stop. That did not happen. Orange line up here, 1.5 ATR trailing stop level, getting close. So as soon as it gets there, then I will institute, if I have a close below previous day's low, I will sell half. So this particular trade up 1.92%. Gold, this one is down just a smidge. I did buy gold back on 525. We had a close under, close back over the 200-day, did not take that trade, moved up, came back here, bounced at the 200-day moving average. That's my signal. Again, position size, where's my end of day stop? I'm sorry, position size, emergency stop, 2 ATRs below. Where's my end of day stop? Just a simple close below the 200-day moving average would get me out of the trade. And then up here, orange line is the 1.5 ATR. So I bought here at 173.01. It's 172.85. So very, very slightly down on the trade. It looks like about 0.06%. So those are the daily trades. Now, I do like to make trades on other time frames. Of course, I mentioned before, I day trade all day long, like to take weekly trades, like to take monthly trades. So this is IWM. I did buy IWM back 513.22. Why did I buy it? Simple rejection of the 200-day moving average. Intra-week rejection. It went below the 200, closed back above the 200, bought at 177.80. Based upon that, position size, emergency stop. Where's my end of week stop on this one? That's right, closed below the 200-day moving average. It tested again the previous week and then rallied nicely. Orange line, 1.5 ATR trailing stop level. This particular trade currently up a nice 5.17%. Alibaba. So I did place a new trade on Alibaba on Friday, the end of the week. Why did I buy it? Well, I have here a higher low V1 entry trigger back into the value zone. And you say, what's a higher low? Well, look at this low back here. This is a lower low, right? This made a low that was higher than this low, higher than this low, and it's a V1. Now, if you go to my YouTube channel, I have a lessons playlist where I discuss V1, V2 entries. They're a big part of my trading. It's really my bread and butter. It's one of my favorite entry triggers, especially when it's in conjunction with combinations and confluences of other signals. I like the combinations and confluences of signals. It gives you a better chance to have a profitable trade. So really what a V1 here is a V1 consists of two bars, bar 1, bar 2. Bar 2 did go below bar 1 and then close above bar 1's close. MACD also green, which puts the odds back more in my favor. So when I saw that, I was like, oh, I like that. Alibaba, it's on a weekly. I wanted more weekly trades. So same thing, position size, maximum allowed loss divided by the value of the 2 ATR. Also place your emergency stop. End of day stop is simply going to be a close below halfway of the V1 trigger bar, which is right here. So right about 88.40. Now, if it goes below intra-week, I don't get out. It's going to have to be next Friday. If it closes below, I will get out. So I did get in here, 93.03. It's 93.41, slightly up. And up here, what's this? Trailing stop level, if I get to the trailing stop level. But you see, my risk is fairly small. I have my emergency loss here in case it all hits the fan, but my actual end of week risk is simply a close below here. All right, so that is what's going on with Alibaba. What did I get in? I got in 93.03. It's 93.43, slightly up on the trade so far. And actually, let's just go through real quick and I'll just show you. So a good rule of thumb for your maximum allowed loss is 1% of your account. It's a little big for me. My maximum allowed loss is 0.5%, but for the purposes of this podcast, let's just take a hypothetical $100,000 account. Like I said, a good rule of thumb is 1%. 1% of 100,000 is how much? That's $1,000. So I take my $1,000. I divide it by the value of the 2 ATR on the weekly, because I am trading a weekly chart, 3082. So I take the 1% of my total account, which hypothetical $100,000, 1% is $1,000. I take $1,000 divided by 30.82, 3244. So I would round that down to 32 shares. You're like, well, 32 shares is nothing. Well, but this is a weekly bar. These bars on average move 15 points a week, right? One ATR is 15.41. So that's how I do it. Now, if you had a $25,000 account, how would it work? Well, $25,000, 1% of that is 250. Same thing, divided by the value of the 2 ATR, divided by 30.82. That would tell you to buy 8 shares. Not a lot of shares, but again, you're having to wait through this the entire week, and this can certainly move a long time. If you have a $1 million account, 1% of that is $10,000 divided by the value of the 2 ATR divided by 30.82. And that would tell you to buy 324 shares. So it all works the same. It's just percentages. Good rule of thumb, 1% of your account. Now, should you expect to lose that 1% very often? No. 1%, you're only going to lose 1% if it moves 2 ATRs below you, and that happens very infrequently. End of day stop is going to happen about 95% of the time. Okay, and then I told you at the beginning I made a mistake on my monthly. And no big deal, but I thought Friday was the end of the month. It is not. Tuesday is the end of the day month, and the last day of the month, excuse me. But I did buy Home Depot on Thursday because of this beautiful return to value, sideways motion, V1 trigger. Here we are above the value zone, green, the top green and the bottom green. Inside here is the value zone. Moving up here, we were certainly above in a nice uptrend. We had a pullback into the value zone. We stopped going down. We had 2 months of sideways motion. We had an attempted false breakout to the downside in the V1. Again, V1, bar 1, bar 2, it consists of 2 bars. Bar 2 goes below bar 1. Bar 2 closes above bar 1's close. Technically, I was supposed to wait until Tuesday because that's when the monthly bar closes, but I got mistaken. So let's do this again. Let's take that $100,000 hypothetical account, 1% of that, $1,000. And you divide it by the value of the 2 ATR on the monthly. You have to use the 2 ATR on the time frame that you're using. That's 72.29. That's a big move, right? So our the amount of shares we're going to buy is going to be very small. 72.29. 1,000 divided by 72.29 is 13.8 shares. I would round that up. Why so few shares? Because I have to wait through this for an entire month. During an entire month, this is the average for this to move is 36.15 shares. So if you're buying a daily, you're going to buy more shares because the 2 ATR is smaller. On a weekly, you're going to buy fewer shares because the ATR is larger. On the monthly, you're going to buy even fewer shares than that because the ATR on the monthly is huge. So you have to adjust by that by taking the smaller amount. So anyway, entry signal, return to value, sideways motion, V1 trigger, emergency stop, position size done, position size done, emergency stop place. Where's going to be my end of day stop? Well, my end of day stop is going to be a close below halfway the washout bar. This is how that is done. So it's a great risk to reward ratio. Don't know if it's going to work or not, but we shall see. So those are the trades, and I bought that one at 307.41 on Friday. It's 308.41, so up slightly. So great week for swing trades. Really nice. Really nice to have that. Hope that happened for you as well. Now, look, I have a lot of positions. I have Apple on the daily. I have Amazon on the daily. I have CCJ on the daily. I have Netflix on the daily, ESSO and gold. And I have IWM on the weekly, Baba on the weekly, and Home Depot on the monthly. So I don't have full positions, of course, because I have been phasing out of all of these on the way up. Not sure if I'm going to add any more positions. The boat's pretty full. We'll just have to see, but hope these keep going so that I continue to scale out more, and we'll see what happens. We shall see what happens. So I talked about trader psychology, and did want to read this. This is from the Divergent Trader at Divergent on Twitter. Great channel. Really love his posts. I've been highlighting them quite a bit lately. Please follow him. Do yourself a favor. They're great posts. They're succinct, and I look forward to his posts. And let's see what the Divergent Trader has to say. There are always pros and cons to every strategy. Totally true. It's just about finding the imperfect one that fits your personality perfectly. Did he mean perfect? Okay, this is how I look at it. Yes, there are pros and cons to every strategy. Being a trend trader, you better have some kind of personality that you're okay to hold on things for a long time. I don't like to hold on to trades for a long time. It's just not in my personality. I like a little faster trades, but so the con for me would be not wanting to stay in a trade too long. The pro of trend trading is that if you really catch a run, you can make a lot. Alternatively, if your time horizon for a trend trade that you're willing to stay in there for a long time, you're tying up your money, so forth and so on, and you may not get the turnover and the quicker profits by buying and selling with a more of a quick type of trading strategy. But this is really true, everyone. And great traders and books have said this for a long time. You have to find a trading strategy that fits your personality. Trading is hard enough, but you want to find a trading strategy that dovetails with kind of what your mindset is. I like quicker, faster trades. I don't want to be in trades for months and months and months, tying up money and so forth. But there's also pros to longer term trading where you have really big wins. So suffice it to say, I really would advise go back through your trades, find the trades that worked best for you and you felt best about that, and do more of those type of trades. In Market Wizards, I can't remember who it was. Maybe it was Marty Schwartz that said, do more of what works. So go back through your trades, and if you can, get an idea of what works better, and I'll bet you that type of trade fits with your personality better. It's hard to put a square peg in a round hole and say, Greg, you only have to take trend trades. Well, that would be putting a square peg into a round hole for me. I want to find a round peg, put it in a round hole for something that fits my personality. All right, but please go ahead, follow Trader at Trader Divergence on Twitter. I think you'll be very happy that you did. Little bonus here for Trader Psychology. This came from my good friend Steve Burns at @SJosephBurns on Twitter. But this is a good representation of what it takes to be a good trader. You can't just have discipline and nothing else. You can't have just good signals and nothing else. This illustrates perfectly the 4 pillars that you have to have in order to be well-rounded and to give yourself the best chance of being a profitable trader. Yes, you need good signals, right? You need to be patient. You need to wait for good signals, preferably signals that have confluences, combination of signals. Position sizing, hugely important. You know, I was speaking with a prospective student of mine on Skype last week, and we were talking about trading. And I told him, I said, you know, position sizing to me is the most important. That's why I take my maximum allowed loss divided by the value of the 2 ATR. That gives me the position size. Think about it. If you buy 1 million shares of something, it's going to inflate, decombobulate you, even if it moves a little, because the prices are so high. So you can't just have the dollars affect you. You have to stay with the process in your plan of the trade. And the best way to do that's with position size. So you need to have good signals, confluence of good signals. You need to position size correctly. Again, I use the maximum allowed loss divided by 2 ATR to give me my position size and my maximum allowed loss. Price action, you have to look at what the price action is doing. Does it have V1s? Does it have V2s? Is it, what are the signals? It kind of dovetails with signals, but what is the price action doing maybe in your trade when you're trying to get out? Remember, I play offense and defense. Well, if the price action it's moving my way and then has a big reversal bar, that may get me out of the trade to lock in some profits. Like I was talking about, reaching the 1.5 ATR trailing stop level, then have a close below, or rejecting the 50 RSI above. It's a bit of a red flag. I remember I did that on IWM on my previous trade on IWM when it rejected the 50 RSI. I got out of that. Thank goodness I did, because it went down another, I can't remember, but huge amount. And then discipline. So important in following your trades. I would have to say, just to be quite honest, this is the one that I'm challenged by the most. So look at the 4 that you have here and be honest with yourself. And I'm pretty good taking good signals. I position size well. Price action, I read quite well. Discipline, I have my days. That's all I can say. I have my days. Most of the time, pretty good, but we all have our days, right? So good signals, position size, price action, and discipline. All right, so before we head to the watch list, I do quickly want to read a poem from my good friend Frank, the trading poet. You can follow him, read his poems every day. He puts one out every day at Franco D. Today's market poem: the market closes this week with a kiss on the cheek. Stocks once revered, now out on the street, and others propped up when their earnings did beat. The wonder of it all, as traders pursue the setup they seek, sometimes success is simply landing on both feet. Nice, right? The market closed this week with a kiss on a cheek, meaning it went up. True. Stocks once revered, now out on the street. There are a lot of stocks that were high flyers before, not doing so hot tamale, and others propped up when their earnings did beat. We had some good earnings. Some of the stocks moved up. The wonder of it all, as traders pursue the setups they seek, sometimes success is simply landing on both feet. Thank you very much, Frank. Appreciate that as always. Please follow Frank at Franco D. All right. So I do want to mention, before we start looking at the potential setups for next week, in this podcast, I just try to teach you at a high level. The way that I trade, the 5 different trading approaches that I use, they take a minute to learn the intricacies and the nuances of. I do have a free video in my lessons playlist where I go over the different types of trades that I take to give you a little bit better of an idea of some of the details. But I do want to remind everybody, I do teach private one-on-one lessons in the evening time via Skype. I teach a 15-hour course where I go over all 5 of the different trading approaches. I teach you step by step how to do it: position size, end-of-day stop, emergency stops, profit targets, overhead resistance levels, trailing stop methodologies, and plus all 5 of the trading approaches that I use. I've taught people from all over the world, taught many people. They've been very happy with the results. And so if you are interested in doing private one-on-one lessons with me, all you have to do, send me an email. Email's in the link of the description, and I'll reach back out to you, try to set up a Skype call with you. The Skype call is free. It's not a sales call. Just want to get to know you a little bit better, learn about your trading challenges, your goals, and it's a great time for you to ask me questions. The course does cost $1,750, but you get someone that's going to teach you one-on-one, answer as many questions, and share their knowledge of 25, almost 26 years of trading now. So if you're interested, just send me an email. It's in the link of the description. Okay. So, all right, let's head over here to potentials. Now, listen, the market has moved up pretty significantly over the last few days. Not a lot of potential setups here. Usually, I don't know, we have 15, 18, 16, something like that. But right now, because of this big move up, there are not a lot. Now, I did mark Apple even though I am already in Apple, but just wanted to I just wanted to put this out there for some of you for possibly a potential trade. I'm not suggesting that you take this trade, but it is a potential trade that you may be interested in. But here, right now, we're 149.64. We have the 300-day SMA. If it closes over the 300-day SMA, that could be a good entry. If it had a nice gentle close, if it races up, I'm not going to touch it because then it's chasey. The risk to reward isn't good. But this had a nice gentle close above the 300-day moving average. If I was not already in this trade, I would possibly take that trade because it gives me a good risk to reward ratio. And then if it loses the 300-day moving average, then I would just go ahead and get out. But I'd have to do the same thing: position size, emergency stop, end of day stop, trailing stop level above, right? So potential interest if we have a close over the 300-day moving average next week. Silver next week. Well, no signal at the moment, but the 5 EMA is below the 20 EMA. If the 5 crosses back above the 20 EMA, that would be a signal. We have had some sideways motion here. So the crossovers, as I mentioned at the beginning of the show, if we have sideways motion and then we have a 520 crossover in AGQ's case, that would get me interested. Ideally, really what I'd like is this just to move slightly higher and move more sideways to give me more compression, more consolidation, and then have a 520 crossover. But the 5 crossing over, the 5 EMA crossing over the 20 EMA is a valid back-tested signal with an edge, not on every trade, but overall. So possibly next week, if we have a 520 crossover, I may take that trade. FCX has had a nice move off the bottom. A lot of 30 RSIs have held, as they do often. Close over the 200-day moving average here would be a potential trade for me next week. Gold, well, I'm already in gold. However, if I was not in gold, if we had a pullback to the 200-day, a bounce, an intraday rejection, or a close back under and then close back over, I would also like that. It would come from a higher low perspective, which I would like. Here we had a lower low, we closed back over. It has held the 200 the entire time, but higher low closes back above the 200 or higher low V1s, V2s, always the best. I don't want it to go down to the 200 or close under 200 because obviously I have a position in it, but if it did close under the 200, I would just go ahead and get back out. But then if it closed back over, then it would be a higher low close under and back over, which I like the best, and those tend to trend the best. Home Depot. Okay, well, I mentioned that I got into this just a little bit early, but I love this trade. So this is, if I was not in this trade already because of a mistake, I would certainly buy this at the end of Tuesday based upon the monthly chart because of the return to value, the sideways motion in the value zone showing some buyers came in to stabilize. And why am I looking for the stabilization? Because look, in building, to build a tall building, you have to have a good foundation, right? That makes sense. It's the same with stocks. The more the sideways motion that you have, especially here in the value zone, which is important, the higher it can climb. Remember, sideways motion leads to trends. We don't know if the trend's going to be up or the trend's going to be down. Hopefully it's going to be down. This is just buying a dip in an uptrend. You've heard of mean reversion. Well, that's what's happened. We have been in a significant uptrend on Home Depot over the months, came back down, sideways motion, triggered the V1. So I'll just have to see what happens on Monday. My end of day stop here is, or end of month stop is 294. If this closed below halfway here on Tuesday, I would have to go ahead and get out because I got in prematurely. Right, but if I was not in this trade, I would certainly take this trade, which I did on Friday. MasterCard. Well, MasterCard, legitimate entry on MasterCard on Friday with the close under 200 and over 200. So that ship's already sailed right now. That's a legitimate entry. MACD is positive. But if we could come back, I'm not in this trade. So if we came back gave a little kiss or a bounce to the 200-day moving average, that would be something I would be interested in getting in MasterCard. Alternatively, if we came back down, had an intraday rejection, closed back above the 200, that would also get me interested in MasterCard. Or if we just simply close below the 200 and then again close back above the 200, that would get me in MasterCard. Now, I do have a rule on these taking closes under the 200 and then back over the 200 or the 250 or the 300. If it happens when the price is at the second ATR channel, I would pass on the trade. Why? Well, we talked earlier about the third ATR channel containing about 92% of prices. So in other words, if we get to the third ATR channel, 92% of the time it's going to stop going up or come down. So why would I want to buy something at the second ATR channel where really all I have is one ATR until I get to the third ATR channel, where I'm most likely going to run into a major level of resistance? So I would like this next week, if it came back down, like I said, bounced at the 200, give me a good risk reward ratio. This is a little chasey. I mean, it's okay, but I would like, I always want to get my entries as close to my level as possible there, because if it closes back below, then I lose the least amount of money. Everything comes down to position size and risk management. So a retest of the 200 next week, I may be interested in MasterCard. Q's, QQQ, NASDAQ 100. Nothing here for next week, but I did want to kind of show you big picture. We have had some good structure changes in the market. We have a low, we have a rally, we came back down, we went lower, and now we have closed back over that swing high. That's a market structure change to the upside. So long term, I think that's good. Short term, we are coming into the 1 ATR channel here, which a lot of times will act as some kind of resistance. My guess is we're going to pull back a little bit, but I think pullbacks can be bought this week. I mean, of course, you have to do your due diligence, you have to position size, you have to look for the signals, but just kind of big picture, now that we were able to take out this high here, it does look to me like the market structure has changed for the bullish. So I will be looking to buy dips, but I wouldn't chase here right this second, because we're coming up to the 1 ATR channel, which probably will act as some resistance, but you don't know in this crazy market. SPY, same thing. We have a low, rally, lower low, close above the swing high. This one a little stronger, made it above the 1 ATR channel, but we do have the 50 EMA. We have the second ATR channel there. 88% of prices fail here. So this all looks good. It all looks bullish. The last couple days did not come on a lot of volume. That's a little concerning to me, but I think we're at a crucial kind of focus point right here. We're kind of at a point where we could easily keep going up, or we could easily be coming down. So be aware of chasing things here. I like big picture that we have changed trend to the upside, but you know the old saying, right? Buy dips in a uptrend, sell rips in a downtrend. This to me looks like we're in an uptrend, but I would be aware, and I'd definitely be aware of a possible pullback in the market, but who knows? It could keep going higher. If it does, I have the swing positions, happy with that. And then XLV. Well, XLV had a close under, close back over on Friday, so that's a legitimate signal. Although for me, what did I just say? You remember I said a close under, close over 200 or 250 or 300. If it's above the second ATR channel, I would not take it. Well, we were right there, and we got stuck at the 50 EMA. So I saw this trade. I didn't take it because of that reason. I'd like a little check back to the 200-day moving average, a little better risk to reward ratio. So that's what I have for this week. Hope you all had a good week. Please remember, if you're interested in private one-on-one lessons with me, so I can teach you the 5 different trading approaches that I use, just send me an email. I'll reach back out to you. It's not a sales call. Just want to learn more about you, see if we're a good compatible fit. So the email's in the description. I also have a great online video course available on udemy.com, where I teach you the deep dip buy trading strategy. Most of the trades that I took this week that were positive did come from that. It's a great course, 9.5 hours of video, 15 study guides, 26 videos total. I teach you step by step exactly how to trade the deep dip buy strategy. The links in the description to Udemy, and the best thing about that online course, it only costs between $12 and $15. So, if you'd like to learn that approach, spend the $15, spend the $12, and you're really going to get a lot out of that course. And then lastly, if you like this podcast, if you found anything helpful, all I ask is that you would hit the thumbs up button, maybe even share it on social media. That would be appreciated as well. But if you found something today that was helpful, or in the past few weeks it was helpful, if you could hit the thumbs up button, it really helps the channel. Lets YouTube know there's some good, valuable content there, so they can get out and share it more. It's a precarious time in the market here, and I think by learning some of these strategies, it would help people. So help me help them by hitting the thumbs up button. And also, I always like to leave off with have a good day, be good, be safe, drive safe. If you could please try to go out and do something nice for someone today, if you could try to make it a goal to do one nice thing for another human being each day, it would make the world a better place. If you could also, if possible, try to go out and do one nice thing for an animal as well, I promise you they would appreciate it. I grew up with a lot of animals. I understand, just like humans, animals appreciate an act of kindness. And if you get to a point someday where you need some help with something, I really hope someone will come along and help you out as well. So have a good rest of your weekend. This is Sunday, so tomorrow the market is closed, but I hope you're having a good time on Memorial Day weekend, getting some exercise, maybe doing a little meditation, a little presence work, a little chart study work. But appreciate you hanging with me. Appreciate you watching this. If you have any questions or comments, please leave them in the comment section below. And hope you have a good week. And I appreciate you being here, and we'll talk to you next week. On the way out here, I have to run the U.S. legal disclaimer. Thanks so much, everyone. Take care, and hope to talk and chat with you soon. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.